The following is a deep dive into the technical analysis of Eli Lilly and Company based upon the weekly, and we are dancing on the edge of its 50 weekly moving average, where in my previous video I induced completely had a definitive breakdown sell signal, and we have been in a near-term downtrend since the definitive breakdown here on the daily interval, as negative and bearish divergences just continued to construct and establish on multiple indicators, only increasing the odds for a larger drop to come. We snapped that level, broke down for a 17% crash, had a whipsaw-like reaction off the 70-30-89 price support level. Then initially had another nice, clean, big counter-trend rally, reflecting and deflected off its 200-day moving average on a complete bearish death cross continuation pattern. Came back again, had a whipsaw-like reaction right above that 70-30-89. So I'm going to take that level out. I've added the new 724.05 price support level for any long traders and short sellers to really respect that level at all costs. And here we are dancing on a primary reactionary downtrend price resistance level with multiple rejections. And make no mistake about it, this is a definitive, healthy, big counter trend breakdown sell signal. And we are undercutting its 200-day moving averages, where the death cross continuation pattern is still formidably intact. Any counter trend or snapback rally back to the primary resistance, downtrend resistance level in correlation of its 883.65 handle will offer an additional objective short trade entry, if not an add-on to your existing short trade position, where some of these levels you have an unfilled and unchecked gap down below, and that will be highlighted as the next target for any long traders and or bull traders to defend really at all cost to avert any further damage within the technical momentum indicators. If you are bullish, that is where you buy. In correlation of its 50, any bigger counter trend snapback breakdown below on an undercut of its gap support would only, in my opinion, offer an additional margin calls and selling to go off, spewing additional technical damage. Make no mistake about it, this gives me what you would call an island cluster top formation, bearish continuation, and only time will tell if some of these levels are key in defending. But make no mistake about it, after or first additional sell signal, snapback counter trend rally, your second breakdown off this primary reactionary price support level off the March lows only offered an additional sell signal. Big breakdown sell signals are occurring, and near term we have a secondary sell signal on a reflection off this primary downtrend resistance level. Long traders, bull traders need to defend the gap support with the 50. In additionally to counter trend snapback rally and break above the 883.65 handle and the top, which we call gap support at the 897.48 level. That will be a huge deflection for any short sellers and bear traders to defend heavily at all costs to avert a further spike in margin calls or stops to go off for any short sellers, including my positions. Stops will be right up above that key inflection point, about 5% onwards, with scaling out process if and when this is a false breakdown. But make no mistake about it, this definitively is a breakdown sell signal. One of the greatest sell signals that I've seen in quite some time that you can possibly get. Do not underestimate how quickly a rush towards the emergency exit doors could transpire on a revisit of the 724.05 final boss support level for a 13.8% crash.